never stops. Even when it all looks different, yeah. Even if I grow up.
Hello, welcome to Jimmy on the Saddle. I'm Jimmy Cho. Today we have a guest who is an expert in residential financing industry, and we will study financing strategies for multifamily properties with her. After the interview with her, I'm going to introduce one property that has great potential to be converted into a 4-unit apartment with proper zoning and big enough lot size in USC area. So stay tuned. Good afternoon. Welcome to Jimmy on the Saddle. This beautiful day here in Costa Mesa. I'm standing on the front yard of eXp Realty office. So today we are going to talk about financing strategies for multifamily properties. Here we have Corissa Dailey. She's a senior loan officer at Paramount Residential Mortgage Group. Corey, would you like to introduce who you are and what you do at PRMG?
Yeah, definitely. I've been a mortgage loan originator since 2001. We originate residential mortgages, which is 4 units and under.
So that actually leads to my first question. For the purpose of financing, what properties fall into the category of residential or commercial?
So any properties that are 1 to 4 units fall under a residential mortgage. If it's above 4 units, it would be considered commercial.
Oh, so all duplex, tri, and fourplex are considered as residential?
Correct.
Wow, so, and they have a better rate, right?
They do, and a lower down payment requirements than commercial.
Wow, then there would be a great benefits of owning multifamily properties.
There definitely
What
is.
qualification do you look for when you help your client with residential income property?
So typically we want to see the debt to income ratio no higher than 45% of your income. So a little bit less than half of your income going towards all your monthly payments. You can use the rental income. You can use 75% of the rental income on the property to help offset that payment of the new property.
Ah, that's great. So the total debt payment should fall below 45% of total gross income.
Correct, before taxes.
What exactly do you mean to offset debt to income ratio?
So that means, let's say the property has $5,000 in rent. You can offset the payment by 75% of that $5,000 you can use to
increase income.
increase income.
So that will decrease the ratio.
Correct.
And how about credit score? You know, a lot of my clients, they think getting a good credit score is a key component to get a loan approved. Is that true?
Well, a good credit score will get you a lower interest rate and possibly lower costs, but it's not the number one thing that we're looking for. The debt to income ratio is a bit more important nowadays.
So is there any difference on terms and rates between owner-occupied and investment property without residency?
For conventional loans, they're both 25% down payment, whether it's a primary residence or an investment property for the multiple units.
The loan for a primary residence has a better rate than investment property without residency, right?
Yes, correct. You'd expect the interest rate to be about 0.5% lower and the cost to be lower as well.
I see. So there will be a great opportunity for first home buyer.
Correct.
Right?
Yes.
So first home buyer, listen. I know that I don't deserve to say this to you because I bought a single family house first, but you will be far better off if you purchase multifamily property first and keep it as a passive income source for your retirement later. Do you agree?
I absolutely agree. It's an excellent investment. Okay. I wish I would have done that myself.
Yeah. My last question is, is there any government-backed mortgage program for multifamily properties?
Yes, the FHA loan. And this is my favorite loan to do for multi-units. It's 3.5% down payment. You do not have to be a first-time home buyer, and the interest rates are very, very low.
3.5%.
I would say 3.5% down.
Wow, that's almost like free.
I know.
And what are the interest rate range?
That one, I would say you'd be in the low to mid 2% for that program right now.
Oh my God. And who is eligible for FHA loans?
You don't have to be a first-time home buyer, and there is no income restrictions as far as how much you can make as an income limit.
I heard that FHA loan has a reserve requirement.
Yes, you need to have 3 months of monthly payments in your account after closing. This can be a retirement account or a regular savings account.
So 3 months reserve.
Yes, the conventional loans require 6 monthly payments to be in reserves.
I see. So it's a lot better deal.
Yes, definitely.
Hi Corey, would you like to give us a summary of what we've learned today from you for those who are looking to purchase multifamily properties?
Yeah, definitely. So for multifamily properties, we generally have 2 options. We have a conventional loan, which you can buy as a primary residence or as an investment property. That typically needs 25% down payment. Or you can do an FHA, a government loan, and that's primary residence only, and that's 3.5% down payment.
Thank you so much for your help, explaining this valuable financing information to our audience. And there are some information I didn't even know, so I really appreciate it. And why don't we give a big hand to Corey?
Thank you for having me. Feel free to reach out to me anytime with questions.
Okay, so I'm gonna put her contact information in this video, so you guys need to call her or email her for further information. Thank you.
Thank you.
It is a single family home with 4 bedrooms and 2 baths on 1,700 square feet of living space. The most attractive characteristic of this property is its spacious lot size of 7,800 square feet. It is hard to find a property with this size in USC area. Let's first look at the map. It is only 17 miles away from USC. It takes less than 10 minutes by bicycle, and it is very close to Freeway 10 and 110. This property is sitting on the 7,800 square feet lot of 52 by 150 feet. It is wide enough to build a multifamily unit with enough parking spaces. However, 2,000 square feet in the backyard was added from the government years ago by previous owner. I was told that it used to be an alley, but now it belongs to the property. The LA County Assessor's data has 7,800 square feet, but the zoning information map only has 5,700 square feet. So please check with the planning department in the city of LA. It is zoned as RD2, which allows multifamily units, and it is categorized as Tier 3 of TOC incentive zone. It incentivizes to allow to build 40% more units with 0.5 parking per unit. So it only requires to build 2 parking spaces for 4 units. So, what do you think about this property? If the lot in the back is cleared with the city of LA, I think it has great potential to build a 4-unit apartment. If you are interested in that property, let me know. I'm going to put my contact information at the end. We'll see you next week. Bye bye.